Hey guys, okay, let's talk. Well, nice little lurch there, Bitcoin. Um, Guys, let's talk about the difference between Bitcoin and alts as far as relative performance. I want to kind of challenge you, not beat you guys up on how you're thinking about things in terms of um, FX risk, but this is an important concept when we try to understand what's relative investing. So when you talk big global macro, there's a difference between a bull market in the States or a bull market in one area of the world and a global bull market. A really true global long-term bull market or long-term uptrend is going to be defined by that asset is rising in all different currencies, because you can have asset inflation that is derived from the currency going down, or you can really have a true bull market where the asset is rising in this currency and that currency, and all these different currencies are a basket of currencies. When you compare that to the asset is rising versus all of those. That will show you a true bull market. And part of the reason, why that is, it's you have to understand that assets are on one side of the equation and money is on the other side of the equation. So what we define money as sometimes changes. I mean, for a while there, gold was considered money because it was fixed to the exchange rate. So, when we traded different notes, they were backed by gold. Well, when we took gold off the gold standard, it was no longer tied, and it moved to this side, the asset side. So now gold, you have gold over here, this is a G, and you have US dollars on this side. So if you remember, guys, when Bernanke was at the Fed, he was burning the buck. So he was literally lighting it on fire, lowering rates and QE, and that was driving the dollar down. It's part of the reason why the dollar was going down. But when you have the dollar going down on this side of the equation, that tends to push gold up on this side of the equation. It's like a seesaw, right? In the schoolyard, when that goes down, the other side goes up, and vice versa, right? So it's very similar when we think about the crypto markets. You have, what do you want to put on what side of the equation? If we have Bitcoin over here, what do you want to measure that against? If you're measuring it against Ether, that's one thing, or Litecoin. But what we care about is Bitcoin rising versus the yen. Is it rising versus the euro? Is it rising versus the dollar? Is it rising? How does Bitcoin performing versus Zimbabwe dollar? How about the Venezuela peso, right? Or some of these weaker currencies. And that's what happens is when you have the currency collapsing, what did the Venezuelan stock market do? Venezuelan equity market chart looks like this because their currency chart was in free fall. That's the relationship. Assets on one side, money, or specifically the currency, a lot of times is what we consider the money on the other side. But the Venezuelan stock market, it wasn't like it was a bull market as far as the companies were earning a ton of money. It was simply you have a collapse in the currency. It's a currency collapse that's driving the asset inflation. That's different than a traditional bull market where the conditions are really thriving for the companies, etc., real growth. So you can have different things can rise for different reasons when you start to bring in the FX, and you have to understand the FX side of markets. And they don't teach that in schools. I mean, you had to learn it from real life trading experience for the most part. You got to be on a desk you got to be a trader that has experience with this stuff. So when a lot of you guys are looking at your altcoin positions and you're thinking you're down a lot. Well, are you really down? Or is it just because the brokers, the exchanges are measuring versus BTC, right? If you have your NEO over here, and then you're comparing that to BTC, well, that's in your denominator. As BTC rises, of course, you're going to have a lower number. NEO versus BTC equals a lower number if this is rising fast. But your NEO, I mean, we don't live in the world, guys, where we're buying and selling in Bitcoin yet. I mean, we're not valuing, we're still measuring our wealth and our assets in terms of dollars and euros, and that may change, but we're still even valuing Bitcoin in dollars. So people get a little bit confused if Bitcoin is going to displace the dollar, but yet at the same time, we're still measuring Bitcoin in dollars. It doesn't make any sense. You're not going out and saying, I'll give you 3 Bitcoin for your car. No, it's, I want $30,000 for my car. Well, okay, I can, based on the Bitcoin price, I can back into how many fractions of, or how many Bitcoin I would need to give you, but that's different. Bitcoin is not functioning on the same level as the dollar is. It's not, we're still measuring things in dollars. So is your NEO really going down? Do you have less purchasing power if you sell your NEO today than you did yesterday? No, I mean, because you look at the NEO chart versus the dollar, it's just going sideways. What we want to care about, guys, is from a trading perspective, if we're growing our wealth and we want to make money, making money is relative. Are you making dollars or are you making performance relative to all the other assets? Both of those things matter. But what we care about is we want to be in the assets that are moving, that are growing, we want to be in the assets where that asset grows, and then we can buy more of the other assets when we think the timing is right, where that asset will grow. That's how you that's how you want to think about your wealth. So if we have Bitcoin moving up, yeah, of course you want to be more exposed to the asset class that's working. If you have gold that's going nowhere, if you have treasuries that aren't moving, I mean, we talk about big picture, you want to be in US stocks has been best performing, especially high beta, things like NASDAQ, technology. That's the stuff that's moving. So there's a lot of relative value trades, you know, US stocks versus European stocks. US stocks has done much better the last 18 months since the election. So are you really losing that? You know, are you really losing all your altcoins? No, you're mostly just getting stuck looking at it versus Bitcoin, which is going to be a different equation. But at the same time, you're missing out on what's moving. Bitcoin is moving. Your NEO is sitting sideways. So either way, we don't want to be stuck in our capital in the stuff that's underperforming. So that's what we want to worry about. Anyway, we just kind of think about that from a different perspective when you start thinking about the Forex side of things. So anyway, I just wanted to touch on that. One more thing, guys, here. I want to start focusing more on the 30-minute and 15-minute cycles. This is going to be really helpful when we start to have the futures and options come online. I just want to show you, look at these cycles that existed in this run. So in addition to having a core position that we're swing trading around, the core position is a long-term hold, right? There's day trade moves to be making money on these cycles also. I mean, look on, if you're buying at these cycle lows, like here, boom, all right? Now, I think most of you, though, it's tough to participate in these day trade moves and actually make some money that matters, because especially as Bitcoin keeps rising, if you get low within the cycle here, you know, it's going to cost you 30 grand, or, you know, you got to be in the market for 10 grand, 9,200 bucks. You get a pop on the cycle. Okay, you make a couple $100, but it's going to cost you a full Bitcoin. You got to That's what the thing with the cash market. You got to put up all that buying power. You know, if you want to trade three BTC on a day trade, now you're looking at almost, you know, $27,000. That ties up most of your capital. So for a lot of you, but it's going to be nice when the futures and the options come on, because then you can get long 3 futures contracts on BTC for maybe $5,000 or something like that, you know, or maybe it's 10,000, but that still is a lot better than having to pay cash straight up for the spot price here at 27,000. Or even better, there's a call option out to Friday, and you buy 3 BTC calls. Maybe that only costs you $500. You know, the most you can lose is 500 if your day trade doesn't work out. Say you broke those bands and you fall back to the 200. You know, the most you can lose is 500. Maybe even you risk less, like 250. But then for 500, you're still controlling the same amount. You get this move up. That's a 9,200, call it to 9,600. That's a $400 move per BTC. You're making roughly $1,200 there, day trade, on a $500 max risk position. That's how we want to day trade. That's why I'm so excited for the futures and options. And you're going to see us taking advantage, guys, more of these cycle lows. Anyway, another thought I had this morning. We'll talk more about that, is kind of understanding the currency, guys, and the FX risk. When you start to compare the currency versus the asset, and it definitely pertains to Bitcoin as well. That's why BTC is really an asset. Yes, we're trading it. Yes, we're transacting in it, and I'm paying consultants and different employees and things in BTC, but still, when we're trading this, we're really trading it versus dollars as far as what we're trying to accomplish here in our accounts. So anyway, you guys, hope that helps. Chat with you a little later.